Hello, traders. FX Pip Collector here. Today is Friday, February 7th, and this is my morning video where we like to take a look at all the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely check out my free Discord trading community. The link for that is at the end of this video in the corner and in the description. Also, if you'd like to join my membership, then you do so at my website, fxpipcollector.com, and you get access to all the benefits listed below and more for only $30 per month. So first thing first, I always like to check the news calendar. It's a really good habit for everybody. And today is a pretty big day. Well, first of all, we have Canadian news, unemployment change, unemployment rate, at the exact same time that we have non-farm payroll news today. So we have non-farm payroll and unemployment numbers coming out today at the exact same time we have Canadian news. Now, everybody focuses on the US dollar news, but sometimes the Canadian news can produce a better and clearer entry than the dollar pairs can. The dollar had this tendency to do a lot of liquidity grabs and stuff like that at the news. So yeah, I mean, definitely pay attention to the CAD pairs, definitely pay attention to the dollar pairs, because those are the news events that we have in the New York session today. So anyways, I always like to start off at the US dollar real quick too, because this is such an extremely important analysis for any of the dollar pairs. It gives me a main direction on what I would assume would happen on every single one of the dollar pairs. So I definitely still think this is an A. I'm definitely still looking at this as three waves up, as three waves down. So 3-3, and then 5. It kind of still looks like we could possibly get another push up. I think this is a 3-3-5 pattern, which is going to be a regular flat, which could turn now, or it could turn into an expanding flat, which would go up there. This move down to me really doesn't look like a real impressive move, like it really is going down. I really wouldn't be surprised if we did get another push up, but we'll have to just wait and see. We have CPI news next week also, which could cause this to do something like that also. At some point, I definitely am planning and seeing a big downtrend for a wave C, but there's really no evidence that this wave C has started yet. So let's move on to the euro dollar. Let's go back down to the daily time frame. Euro dollar definitely did break structure to the upside, as you can see on the daily, and it definitely does have 5 waves up on the daily. This move down definitely looks corrective. So I would always assume that this is either an A or 1. I would always assume this is a B or a 2. Why? Because if this shows me evidence that it is a wave C, then I definitely want to get out of any logs and go short, because it could continue to downtrend if it really is a wave C. If it really is a 1-2 and it really is now in a wave 3, then potentially this is going to just keep on trending and trending and trending, making higher highs and higher lows, probably turning into a big trend reversal on the much higher time frames. Unfortunately, we really don't have any evidence that it really is anything beyond a wave C. So going down to the 1 hour time frame, currently on the 1 hour time frame, I have my Fibonacci on this move down right here, Fibonacci retracement, because this move down is definitely a trend in my eyes. It makes me think that it's probably a wave A. This whole move up is also a trend, which is why I think it's probably like a 1 of 3 or a 1 of C, meaning that this is an A. I think this move up right here is likely a B. I think there's a pretty good chance that we are going to get another push down for a wave C, either at the news or maybe after the news, probably to finish off an ABC of 2. And then we should go up for a wave 3 of C or a wave 3 of wave 3. Either scenario, definitely, if you can catch the end of this correction, either scenario should be a very profitable trade. So let's move on to the pound dollar. Pound dollar very similar to the euro dollar, except for the pound dollar did make an engulfing move to the downside yesterday because of the pound interest rate news we had yesterday. And also the pound has not broken structure to the upside. So technically, even though we've been going up for several weeks now, the trend is still technically down on the daily. There has not been a break of structure to the upside yet. This move up, just like on the euro dollar, definitely looks like a trend. This move down looks like a correction. This move up looks like a trend. This could possibly be an ABC correction, and this could possibly end up continuing the downtrend, especially with the fact that it never did give us a change of direction with a break of structure to the upside. So going down to the 1 hour time frame, just like the euro dollar, we made an impulsive move down. This is more impulsive because of the pound news we had yesterday, the interest rate for the pound. So that move down, just like on the euro dollar, is definitely a trend. This move up to me looks like a correction. We got our Fibonacci retracement on here. We're watching our fib levels very, very, very closely. If we get a nice big engulfing move down at a Fibonacci level, then I would say that's the end of a wave B and we're going down for a wave C. Now, like I was saying on the higher time frames, there is a chance that this is the end of a correction. And if I assume this is an A, B, C and I go short, but then it just keeps on going and turns into a 1, 2, 3, if anything, that's going to be like a bonus trade because a wave 3 is going to go a lot further than a wave C is, and I wouldn't exit my trade until I saw a breaker start to back up. If it's a wave 3, it'll just keep on going. If it's a wave C, it'll break start to back up probably next week and continue back up. And that if that happens, it would end up being like a 1, a 2, and then eventually back up for a 3. So let's keep going. We'll look at the Aussie dollar back up on the week daily time frame, that is. Now, the Aussie dollar also has not given us a break of structure. Technically, the trend is still down on the daily time frame. The Aussie dollar definitely looks like a potential five-wave trend down. So it looks like a complete five-wave trend. But just because you see five waves does not mean that it has to go up and it has to break structure. It could potentially make a lower high and go down. If this move up really is the end of a wave 5, then it needs to take out the high of wave 4. If it doesn't take out the high of wave 4, then I think it probably is going to go down, and it probably is going to continue to downtrend. If it, as in, like the first wave needs to take out the high of wave 4. If the first wave does not take out the high of wave 4, then it's probably not the end of a trend. So going down to the 1 hour time frame, just like the other dollar pairs, it made what I think still looks like a downtrend. I mean, to me, that definitely looks like 5 waves down. This still could end up being a wave A, even though this is a higher high. This definitely still could end up being 3 waves up, even though it's a higher high wave B. I think there's a good chance we're going to get a push down today. I think there's a good chance we're probably going to go down to a Fibonacci retracement on this whole move up, making an ABC correction before we either end up continuing the uptrend, or if it never gives us that break of structure, maybe it really will turn back into the downtrend and turn into a 1, 2, 3, other than being an ABC. Either way, it definitely looks like right now that it's likely to go down for either a wave 3 or a wave C, just like all the other dollar pairs, which is why the US dollar analysis is so important. It gives me direction on every single one of these dollar pairs. Kiwi dollar, exactly the same analysis. US dollar CAD. Now, the US dollar CAD has still not given us a break and started down. We still cannot say for sure that this whole uptrend is complete. That is a huge spike reversal right there, but I mean, technically, it's still in an uptrend. There's still no break of structure. And to me, it definitely went down to structure, but it didn't break it, which makes me think that it's going to pull back now. Then if it pulls back and hits a fib level, and then next week or the week after goes down a big structure, that's going to be awesome because then we'll know that this whole uptrend is over. But right now the trend is technically still up, and it looks like it could go up and make a correction to the move down. And if you end up going long and it just keeps going up, that's going to be like a bonus trade also. Going down to the 1 hour time frame, it definitely did push up. And it actually did end up breaking structure to the upside, which I think would confirm this move down is over. This move up right here is probably an A. I would assume it's an A, which would be a correction to this move down. I would assume that this is a B, and I would assume that it's going to go back up for a C. But if it really is actually a 1, a 2, and you end up going long and it's actually a 3, then it'll just turn into a very, very impulsive move. So I think we're either looking at a 1, 2, 3 or an ABC. An ABC will go to a Fibonacci level, break structure to the downside at a Fib level, giving us a reversal back to the downside. A 1, 2, 3 will probably bounce from Fibonacci levels, but will never give you a break of structure, never giving you the reversal, which would never be an exit for your long, and potentially it could just keep on going up if that's the case. Moving on to the US dollar Swiss, back up to the daily time frame. Because of the dollar analysis, I think there's a good chance that this downtrend right here is an A. I think this move up right here with a little bit of a lower high is a B. I think there's a good chance we're in a wave C right now, which means that there's a very good likelihood we are going to go back up. We are going to grab that high liquidity that I've been talking about. Most wave A's and wave 1s do take out the high in the previous down move, which it has still not done yet. Which is why, with the dollar analysis, I'm still looking at this move down as potentially a wave C, maybe even a wave C of wave 4. So keep that in mind. Let's head down to the 1 hour time frame. On the 1 hour time frame, I got my Fibonacci retracement on this whole move down right here because either we're in a crescent to this move down or we're in a trend reversal. According to the other dollar pairs, I kind of feel like today's news might cause this to go up. It'd be nice if this ended up drifting down prior to the news because I could see 5 waves. It kind of looks like it could be like an expanded flat right there, and then it might drift down prior to the news or maybe at the news and then end up reversing back up for either an ABC or a 1, 2, 3. Like I said, there's a good chance that this does go up and hit this blue box way up here, which would be the liquidity grab that we're waiting for to finish off that big wave 8 or wave 1 on the daily and weekly time frame. So I'm definitely keeping an eye out for that on this one. Let's head back up to the daily time frame and check out gold. Now gold is definitely getting close to my next area of resistance, the 138.2, which is just above the 2880 area. Now, I've been saying for several weeks now that this could be a way B, and I've also been saying that if you get a break of structure at a Fibonacci level, to start looking for sorts. Now, look at this move up. Was there ever a break of structure to the downside telling you to look for sorts this whole time? Definitely not. So what should you have been doing? You should have been looking for logs at the end of every single little teeny pullback you see on the sort of time frames until these higher time frames do give you a break of structure to the downside. I still think this could be a way B. An expanding flat way B can go to the 138. If it goes beyond the 138, then it's not a way B. It's just a continuation of the uptrend. But honestly, it doesn't matter because the trading strategy for the past several weeks has been look for logs until you get a break of structure at a Fibonacci level. We still don't have a break of structure at a Fibonacci level, so the strategy for the last several weeks would have been looking for logs at shorter time frames at the end of pullbacks. Going down to the 1 hour time frame, if you watched last night's video, I said that this move down looks like a trend, more than likely a wave A. This move up right here, I said could end up being a crutch into this move down. If it goes beyond the 78%, then that probably is going to invalidate that, but there's a good chance this will go down for a wave C, and this is going to be a wave B, and then it probably is going to pop up and hit that 138.2. And if it goes down and breaks structure at that level, then great. That probably is the end of a trend on the daily. If it doesn't go down and break structure, but it continues to make higher highs, higher lows on our higher time frames, then guess what I will be doing? I would be looking for logs at the end of every single 1, 2, 3 way pullback. 1, 2, 3 way pullback. Even these little ones over here, 1, 2, 3 way pullbacks. So definitely still bullish. I wouldn't go short planning on this wave C to be honest with you because it doesn't even have to make a wave C. It potentially could just keep drifting up because the trend is literally up on every single higher time frame, which is why I would not recommend going short for the wave C. I would recommend trying to go long, and if it does go down for a wave C, then that's fine. You can just try to go long once the wave C is over for the continuation of the uptrend. Moving, moving on to the US dollar yen. Now, the US dollar yen does definitely look to me like the end of a wave B. Now, that doesn't mean that we might not get some rallies on sort of time frames, some decent sized pullbacks. But on the daily time frame, I think this is going to, over the coming months, continue to make lower lows, lower highs, because I think this is an A. I think this is a B. I think we're going down for a C of 4. So that means that we likely have a lot and lots of downside potential. Like I said, that doesn't mean there might not be some rallies on sort of time frames, but overall, very bearish. Now, this does look like 5 waves down. Just because you see 5 waves doesn't mean that it's an end of a trend and it's going to go up. I mean, it definitely could make a lower high, and just keep going down. Based on my dollar analysis, I think there's probably is a good chance that it is going to make a little bit of a move up. Probably going to end up being just a bigger ABC correction, probably something like this, before we actually do end up continuing the downtrend. But like I said, I would be very cautious assuming it's going up and trying to go long. I would be mainly focused on trying to go short at the end of 3 way pullbacks. If it makes a lower high compared to this right here and goes down, then you should be looking for shorts. You should be highly focused on looking for shorts and not looking for longs, counter trend moves. And on the euro yen, I mean, a lot of these other pairs like the pound yen and the euro yen really look like they are in a downtrend for a big wave C, which I think will go down and take out all these lows. A, B, C, probably an ABC of 4. So that means overall the trend is probably going to be down for a while. We are closing below the 78%, which is also another good sign that it probably will end up continuing down. Doesn't mean that there might not be a few days of ups on the shorter time frames potentially throughout this move. What it does mean is on the daily time frame, it will probably make lower high, and just continue the lower low, lower high series on these higher time frames. Going down to the 1 hour time frame, we are definitely drifting up. We definitely do have a bigger structure. I would be very, very cautious about going long personally. If it was me, I would personally be focused on trying to get short at the end of three-way pullbacks. If you are a short time frame trader, I can definitely see why you would want to go short at the end of a wave B, but the problem is assuming that it's going to go up for an ABC correction is a losing trader's game. Because a lot of times you'll see something like this and then it'll pop up and then just go right down because all the higher time frames are telling you to look for shorts. If all the higher time frames are telling you to look for shorts and you go down to the 1 hour time frame and below and go long, that is just asking for the market to take your money away. So moving on to the pound yen, pretty much exactly the same as the euro yen. Just a little bit, the pound was a little bit weaker overall. It seems like it's getting stronger now, but same type of thing. I think this is an A. I think this is a B. I think that we're already in wave C. I think there's a very good likelihood this is going to keep going down, probably take out all these lows right here. A, B, C, probably A, B, C up 4, just like on the euro yen, and potentially even on the dollar yen. So we definitely do have a breaker structure to the upside on the 1 hour time frame. What does that tell me? That tells me that probably we're just starting a bigger correction. Probably we're just going to end up making a bigger ABC correction, which likely would be a correction to this whole move down. You could try to go short at the end of the wave B, just like I said on the euro yen. Try to go long for the wave C, but it's a dangerous game because it really doesn't even have to make an ABC like this. It could honestly end up doing something like this and then just shoot right down. Because the trend is down on every single higher time frame, I would recommend focusing on shorts. When I see a break of structure and I on the 1 hour and I know the trend is down on the long time frames, I get excited when I see a break of structure, not to go long, because I know that if I see a break of structure, then at the end of a three-way pullback, I can go short, and it will be the beginning of a brand new subdivision, a brand new trend on these shorter time frames. So I definitely am looking for shorts. I personally wouldn't be trying to go long. If you are a short time frame trader, I see why you would want to go long right here. Just be careful because the trend is down on literally every single higher time frame. And the trend is definitely your friend as always. So anyways, don't forget to join my free Discord trading community and thank you for watching and happy trading.